Hey, this is Jeremy Burgess, the Detroit Market Expert, and welcome to another episode of Detroit Investor TV. This one we're going to cover financing for international investors primarily, but also for some American investors as well. But most Americans don't ask this particular question. First off, you got to understand the market in America. In a healthy real estate economy, there are two values for the home. One is a financed value, meaning the home is in perfect shape, it's in financeable condition, and somebody's buying with a loan. And the other is a cash value, usually meaning there's a serious problem with the home, or it's not in financeable condition, or there's a people problem attached to it. Bankruptcy, divorce, probate, something like that, and they just want to get rid of the home fast, or maybe it's outdated for the market, right? So in a healthy, normal real estate economy, the difference between the two is normally 20 to 30%. And obviously we are not in a healthy real estate economy, hence why the prices are so low. In getting to that point, there's one underlying reason why the property values and prices are so low right now. There are essentially no financing options. None. If you're American, it's very tough to buy a property, a foreclosure that needs to be rehabbed. And even if it is rehabbed and already has a tenant placed in it, most banks, the vast majority of banks, have a minimum loan requirement, which is $50,000. And obviously that doesn't necessarily work in the Detroit market as a financing model. What the Americans do is if they have great credit and they have great cash and they have what we call W-2 income, meaning they work for somebody, it's easy, they got 2 years of tax returns, they will buy and fix up and rehab it and hold on to it for 6 months to a year, then go to the bank to get refinanced. Or they'll buy a turnkey property, collect rent for 6 months to a year, then approach the bank to refinance their purchase on the property. Now, if you're an international investor, there are no financing options for you in America, for Detroit that I know. I heard some people talk about other stuff. I haven't been able, it's like the holy grail. But that's not necessarily a bad thing. They're not hardly giving Americans money. So they're certainly not going to give someone who lives far away money, doesn't have a social security number, doesn't have our credit reporting system and all that. But that's actually a good thing. And it's a good thing because it pushed these prices down so low, to these cash prices, where only 1 in 100 sales in Detroit is actually a financed sale, meaning a traditional home sale. The rest, it's an all cash market. So that's why, hey, these homes used to be worth, $120,000, $130,000, $140,000, $150,000. That was when financing was available. No longer available. Obviously, you can buy them significantly cheaper now. So it's not necessarily a bad thing. I also get lots of questions about hard money. Is there hard money for me to borrow? And there are a few hard money sources left standing. Here's the problem. Hard money wants to get in and get out quick. Typically, they're looking at a 6 month to 1 year turnaround. It's very expensive, at least 17% interest, and usually some points associated with it too, which is a percentage of the deal, generally somewhere between 6 and 12 points is what you're going to see. And they still care about credit, they still care about income, and I've approached several of them talking about international investors because you guys asked me, can I get a hard money loan to finance this a certain percentage? And the answer has been overwhelmingly no, for one reason. How do we get out of the property? They don't want to hold that loan for the, especially 17%, you think how many years that's going to take you to pay off. That could be, just using the rent, that could be 5, 6, 7 years. That's not what they do. That's not what they're interested in. They want the quick turnaround, 6 months to a year. They're looking at exit strategy, and from their point of view, your exit strategy kind of sucks. You can't get refinanced. There are no financing options for you, so why would they lend to you? But this all comes back to the point. And the point is, this is actually a good thing. This is a good thing because the prices are so incredibly low that most people can scrape up together $35,000, $40,000 to do a Detroit deal and get that great cash flow. Now, some creative things that my clients have done in the past is they have refinanced their own home in their own country, where the credit markets are a little healthier, or they've got lines of credit or bank loans from their own country, or they've pooled family money to be able to do this. And here's the reality of the situation. If somebody else finds someone willing to finance international investors, that's an indication of market recovery. And if the market's recovering, and the second the credit market recovers, you are going to see that credit market financing sale level recover. What does that mean? That means higher property prices. Right now it's all cash. As soon as financing options change and become available to even a percentage, 20% of the population, or to especially international investors, because it'll come first to Americans and then it will come to international, you're going to see prices going up. So the reality is, if you want to take advantage of these low prices, you actually don't want to see financing options, because you will immediately see increased prices in the market, because most people could come up with $3,000, $4,000, $5,000 to put down to finance a property. Who cares what the purchase price is? I want to live in it. And very few people have the cash lying around. So when that option becomes available, those deals will not be available at the previous these really low prices. So this is actually a request that I got from several people. So it was just kind of in queue because I had several requests for Detroit Investor TV episodes. So I finally got to this one. If you have any other questions on it, please leave a comment or send me an email. But that's the reality. The reality is it's a good thing. It's not a bad thing. That's why the prices are so low. That's why the cash flow is so great. And that's why it's such an amazing opportunity. And when the financing options change, we're going to see upward pressure on the market for price. So thanks for tuning in. This is Jeremy Burgess, the Detroit Market Expert from Urban Detroit Wholesalers. Thank you for watching another episode of Detroit Investor TV, and I will catch you guys later. Thanks.